regards to what we got from the authorities on Friday, I mean, it does look like they just want to stabilize things rather than massively stimulate things. The markets, it does look like the reaction this morning seemed to be sort of coming around to this idea.
I think that's fair. And as you say, we haven't seen a major sell-off this morning. And even on Friday, what we saw was initial, for example, in the bond market, bonds rallied, and then we moved back again as the market started anticipating bigger stimulus down the line. So in a way, it appears that China is keeping its powder dry. We still don't know the contours of Trump's policy towards China, and will we see 60%? Will we see less? What and how quickly they'll be implemented? Well, will Trump do a deal with China? Who is going to be, the Treasury Secretary? There's a lot of uncertainty still around policy from the US. And I think it makes sense to have this announcement that's not over-delivering. And, okay, we had a bit of disappointment on Friday where, there was no real announcements on consumption, nothing on the property sector, and I think that's what markets were looking for as well. But clearly the debt swap itself is still significant. It will help. We talked about it earlier, but it'll help start paying bills, start getting the process from some of these local governments to start being able to increase their spending now and start moving ahead with, where they've been stuck with a lot of these hidden debts in the past. Yeah,
because ultimately some of those concerns, as you say, the businesses not being paid, people losing their jobs, these civil servants having their salaries cut, does look deflationary. And that's perhaps why we continue to get these numbers like we got on the CPI headline on Saturday as well. So you say the powder being kept dry and, waiting for Trump to get his feet under the desk in the White House come January. What do you think the next sort of course of action would be from the Chinese government, particularly if, we do get a clearer picture of Trump's trade policy and it is tariffs on goods to the tune of 60%? I mean, they really need to do something about consumption then.
No, that's right. Look, I think there's two focuses that we're looking at. We've got a Central Economic Work Conference coming up in December that will be key, then the March NPC as well. So I think hopefully by then there'll be some idea of what policy may look like. It's not obvious that we will know by then, but certainly by March we'll get a better idea. And again, if there are going to be tariffs, it could still take a few months for tariffs to be implemented. But China then will have the space, the time to gear its policy towards what it's going to be faced with in terms of tariffs, right? And the economic hit could be significant from that. And so if that is the case, you could end up with much bigger fiscal stimulus, right? You could end up with, measures to really start propping up the property market in a real way, in a meaningful way. Consumer could be helped, although I still think that there is a reluctancy from the authorities in China to boost too much in terms of direct consumer spending. There's this sort of anti-welfarist tone. So I don't see that being a clear way of trying to stimulate the economy. But property is really key. Recapitalizing the banks will be important so they can start relending again. And the debt swap itself, as you said, it clears up some of the hurdles towards, or at least towards ending deflationary pressures in the economy.